Hi, I'm Vic Hartman with the Hartman firm. Today I'm speaking on the topic of fraud. More specifically, how does an organization deal with fraud? We're going to answer the how question. How does an organization deal with fraud before, during, and after a fraud event? I hope to also provide some insights into how to provide a fraud-resistant organization. Back to the how question. How does an organization deal with fraud? Well, it depends on a variety of factors. One is, what type of fraud are we dealing with? Is it a financial statement fraud, misappropriation of assets, or corruption? How big or systemic is the fraud? Is it going to involve a lot of dollars? Does it involve reputational risk? Is the media looking into this? Is law enforcement or a regulator looking into this? Well, how a company resolves their fraud risk issues will somewhat depend on the plan and if they've thought it through carefully. It's part of crisis management, right? So, like any crisis management plan, how does a company deal with, say, a vehicle recall, or maybe a devastating cyber attack, or a natural disaster? There should be a crisis management plan in place, and fraud could be one of those crisis managements that needs to be addressed. So this plan could be integrated into the crisis management plan in whole or in part, or it could be a standalone plan. Who should own it? Well, senior management should probably own the responsibility for the plan, and this can be shared with other risk managers, internal audit, security, or others within the organization. What I want to do is give you a model. So if you want to develop this plan, you'll have a model to go by in assisting you. What I'm going to introduce is the fraud life cycle. This is like the life and times of fraud. So it's before, during, and after. It will work with those issues, and it's a cycle. And it's going to also be like a 30-foot view of this, so we won't get into a lot of the details, but we will get a framework, and it'll help you with a crisis management plan as it relates to fraud. So what's the first step of the fraud life cycle? I like to use the term deterrence. Notice I didn't say prevention. Prevention is actually unrealistic. But what are the best practices so we can deter fraud in our organizations? If you saw my previous video on the fraud triangle or the fraud tree, I was giving you a methodology on how you address fraud. What I now want to do is add some tools to that methodology. So one is policy. You want to have best practices and policies. One is, do you have an ethics policy in place? Do you have a conflicts of interest policy in place? And do you have an anti-fraud policy in place? And of course, these three policies should be congruent with the employee handbook. Some other controls would be hard controls. So I won't go into a lot of details, but one basic hard control would be, do you have segregation of duties so that you don't have somebody approving expenditure and signing the check for that? Also, what about soft controls? I think soft controls can be more important than hard controls. Now we're talking about tone at the top, the culture of the organization. Do employees want to do the right thing for the right reason? And again, this is a 30,000 foot view, but I'll also provide you some other guidance or some other insights. The Institute of Internal Auditors has a 3-line of defense policy, and there's also the COSO guidance, and the federal sentencing guidelines also provide guidance. And if you're an SEC registrant, you may be bound by Sarbanes-Oxley 404B rules. So that's the deterrence piece. How about, what's the next element of the fraud life cycle? Detection. So we know we can't deter all frauds, so detection becomes very important. In fact, the longer a fraud goes, the more costly it becomes. We also know from the Association of Certified Fraud Examiners that the best message for method of detection is from employees. Employees will be around the fraudster, and so they'll be the first defense mechanism in terms of detection. So two things are important here. Employees need to have fraud awareness and understand the red flags when they occur. And secondly, is there a culture of compliance so when they do see this fraud, they'll report it to the right employees. Another important element for detection is a fraud hotline. This can be both for employees and an external constituents like vendors. The importance of a hotline is that it's inexpensive and it's very effective, and so I highly recommend it. Another method for detection is continuous monitoring. And this can be for more mature organizations. It's data analytics. It can be really relatively expensive on the front end, but highly effective. So it's real-time monitoring of every financial transaction, so it's excellent. For an example, say you're an organization that has P cards or credit cards. This will enable you to monitor real-time. So you set a data parameter, and when it exceeds that, then a notification will go to the appropriate supervisor. So in terms of a worst practice, those were best practices. Let me give you a worst practice, and I only mention this because I've seen it so many times, it's frustrating. But I call it the stovepiping, where there's a failure to communicate. It's like it's a slow train wreck, and yet nobody's seeing it. So you have multiple parts of the organization involved. You may have security involved where they see somebody exceeding or coming in at odd hours in the building at odd hours of the time. You may have somebody in the accounting department that sees a travel voucher with some red flags on it. You might have somebody in the IT department where they see somebody exceeding their digital authority. You might have somebody in the human resources department that's looking at some type of harassment issue. And you might have management to see somebody that has an alcohol or drug abuse. And then you have everybody seeing the big red flashy Ferrari in the parking garage. And equally surprising is when everybody learns that a senior VP has been embezzling for years, then everybody's surprised. So what you have here is a failure to communicate. It's stovepiping. You had all these red flags occurring, but they weren't put together. So there is best practices where you can have like a dashboard to track this information. What is the next step of the fraud lifecycle? Investigation. So if we weren't able to deter it, and our detection mechanism did work, and now we're aware of a fraud event, a fraud crisis. How are we going to handle that? Well, in large part, it's going to again depend on what's the size of the fraud, the magnitude of the fraud, what's it going to look like for the organization. If it's a significant fraud, we probably want it to be attorney-led. And this is for a variety of reasons. One is we want legal advice through each step of the investigation in the process. Also, we want the very important attorney-client privilege, so whatever product we have at the end of this investigation is protected by that privilege. How about the resources? Who's going to investigate that? Where's that going to come from? Well, we can, at least one opportunity or alternative is to look inside the organization. We could have the security department, which may have very talented resources. Internal audit is always a good source for resources. Human resources, information technology will always play a piece because it's probably going to involve emails or other digital footprints. Maybe management needs to assist in the investigation. But there are two factors that you consider when you're choosing people inside the organization. One is a potential conflict of interest. For one thing, these individuals may also be responsible for preventing the fraud they're creating a conflict. And also, they may be near the fraud or may potentially involved in the fraud themselves, so that would create an obvious conflict of interest. The second thing to consider is independence and credibility. So depending on where this investigative report is going to go, if it's going to go outside the organization, like to the media for credibility, to law enforcement or a regulatory agency, then this needs to be independent and credible. However, if the report's going to be used for internal purposes or the board of directors, then maybe an internally developed report would be fine. Best practices would dictate that you have an external attorney lead the investigation who then engages a forensic CPA firm to work on it. The downside of that is it could be cost prohibitive as they are expensive. You can also develop a hybrid model where it's led by an external attorney, but you use internal resources. So what is the fourth step of the fraud lifecycle? This is remediation. So at this point in the investigation, it's mature and developed. We know we have a problem. So we have to start dealing with issues like trust. All of our stakeholders, our investors, our customers, our suppliers, sometimes even our employees, they're starting to have trust issues, even the public at large. So we need to be communicating with these stakeholders. However, this communication needs to be vitally accurate. That's the importance of a comprehensive and independent and accurate investigation. Then we can start relaying the message to our stakeholders. What are some other issues that need to be remedied? One is legal issues. At this point, maybe the appropriate employees have been fired or need to be fired, and maybe they need to be sued so we can get some of the assets back to the corporation. Maybe criminal referrals need to be made to law enforcement. Maybe we can use some of law enforcement's criminal authorities to use asset forfeiture to get assets back into the company. Also, is an insurance company or fidelity bonds available that we need to be pursuing that avenue. The fifth step of the fraud life cycle is mitigation. Mitigation is obviously there's been a problem in the organization, right? So we need to plug that problem. We need to develop an internal control so that this problem never happens again. It's also likely that we need an assessment of the internal controls, because if we had this gap in internal controls, we may have others. And lastly, it's time probably to engage in employee training, fraud-related training, to stop this in any future occurrence. So this is the fraud life cycle, and I hope you've learned two things from this. One is it will help you and assist you and your management develop a fraud-resistant organization. And also, if you're ever dealt with a fraud event, it will give you a framework to deal with the issue.